Hey everyone, welcome back to Zacchy Crypto Update, your go-to channel for the most honest, data-driven cryptocurrency insights. I'm Zacchy, and today we're diving straight into the turbulent yet intriguing world of Pi Network. We're going to dissect why Pi Coin's been on a wild ride, what the technicals say about its potential rebound, and whether it could surge 400% and break the $4 mark by May. Let's get right to it. Let's kick things off with a quick look at where Pi Coin stands. Earlier this year, Pi Coin hit an all-time high of nearly $3 in February. But since then, it's seen a drastic drop, plummeting by about 74% to hover around 84 cents. This sharp decline hasn't just dented investor confidence. It's also shrunk the market cap from nearly $20 billion down to about $5.35 billion. Such a dramatic contraction in market value clearly signals both caution and opportunity in equal measure. But why the steep fall? One of the prime issues here is the coin's absence from top-tier exchanges like Binance, Coinbase, and Upbit. Instead, it's trading on platforms like OKX, Gate.io, and Bigit. This limited accessibility has significantly impacted its demand, making it harder for the average trader to get involved. Let's break this down. When a cryptocurrency isn't listed on major exchanges, it automatically loses a chunk of its potential market. Imagine trying to buy a popular stock that's only available on a few obscure platforms. That's exactly what's happening with Pi Coin. Despite its popularity among a niche group of users, the lack of a listing on giants like Binance means that its liquidity and overall demand remain stunted. For instance, Upbit is a dominant player in South Korea, a region where Pi is particularly well known. So, if Pi Coin were to secure a listing there or even on Coinbase in the US, it could see a significant uptick in trading activity and investor interest. Now, let's talk about one of the major catalysts for the current downturn, future token unlocks. Over the next 12 months, Pi Coin is set to release more than 1.6 billion new tokens into circulation. This dramatic increase in supply is causing panic among current holders, triggering a wave of sell-offs. It's a classic case of more supply, lower price, at least in the short term. Investors are understandably nervous about this sudden flood of tokens. The potential dilution is putting extra downward pressure on the price, which means that for Pi Coin to see a rebound, these issues must be addressed head-on. It's a delicate balance between managing supply and boosting demand through increased market visibility. Let's dive into the technicals. Despite the setbacks, there's a glimmer of hope on the charts. Analysts are noting that Pi Coin recently broke out of a falling wedge pattern, a move that is typically seen as bullish. In technical analysis, breakouts from such patterns often hint at a potential turnaround, especially if the coin can hold on to its current trend line as a support level. At the moment, technical indicators like the Relative Strength Index, RSI, show that Pi Coin is oversold. This could very well signal that the market is primed for a rebound. Furthermore, on-chain data is picking up on some significant buying activity by larger investors. These whales are snapping up Pi tokens, which might be a precursor to renewed investor optimism and, hopefully, an upward price movement. In this scenario, if Pi Coin manages to hold above the support level, we could see it climb toward the next resistance level of around $1.22 and potentially push further to $1.50. It's a tentative but exciting technical outlook for those who've been watching the charts closely. Now, here's the big question. Can Pi Coin reach the $4 mark by May? Some analysts, including those at CoinCodex, are betting on a dramatic rally, up to a 400% increase. They believe that if the current bullish signals persist, Pi Coin could potentially hit an all-time high of around $4.11 by early May. This prediction, however, isn't coming out of thin air. It's rooted in historical price movements and the possibility of broader adoption within the Pi Network ecosystem. But there are a few key catalysts that need to align perfectly for this to happen. As we discussed earlier, a listing on major platforms like Coinbase or Binance would boost accessibility and, in turn, demand. This is arguably the most critical factor for any significant price surge. A positive trend in the broader crypto market, especially with Bitcoin continuing its upward momentum, could create a ripple effect. When the flagship coin does well, all coins often follow suit. Continued accumulation by institutional and major investors can lend a lot of credibility to Pi Coin, potentially driving speculative buying and long-term holding. While the outlook appears bullish from a technical standpoint, the market's inherent volatility means that this target is far from guaranteed. It's a high-reward scenario, but not without its fair share of risks. Looking ahead, the future of Picoin is anything but certain. The project's success hinges on overcoming several challenges. For Picoin to truly gain momentum, it must see increased adoption not just as a speculative asset but as a functional cryptocurrency within its ecosystem. Securing listings on major exchanges is vital. The increased exposure would not only improve liquidity but also attract a broader investor base. Like many altcoins, Picoin is navigating a complex regulatory environment. Clearer regulatory guidelines would help reduce market uncertainty and encourage institutional investment. The long-term value of any crypto project is deeply tied to its community and developer activity. Continued innovation and community support could pave the way for more substantial future gains. Given these factors, while there's potential for a robust rebound, investors should be extremely cautious. The sharp decline and ongoing supply issues underscore the speculative nature of Picoin. It's a project with promise, but also one with significant hurdles to overcome. Before we wrap up, let's address an important point. Trading in cryptocurrencies, especially those with volatile price histories like Picoin, comes with substantial risk. If you're considering an investment, it's crucial to do your own research and only commit funds that you're prepared to lose. The last thing we want is for anyone to be caught off guard by the inherent volatility of the market. This video is for informational purposes only and does not constitute financial advice. Always consult with a professional financial advisor before making any investment decisions. Past performance is not indicative of future results, and cryptocurrency investments carry a high level of risk. In summary, while Picoin has faced significant challenges, from limited exchange access to upcoming token unlocks, the technical indicators and market sentiment suggest that there could be a rebound in the near term. The possibility of a 400% surge and a price target of around $4 by May remains an exciting, albeit speculative, prospect. The next few weeks will be critical in determining whether Picoin can overcome its obstacles and reclaim investor confidence. That's a wrap on our deep dive into the current state and future prospects of Picoin. What do you think? Is a dramatic surge on the horizon, or are the risks too high for a sustainable recovery? Drop your thoughts in the comments below. I love hearing your insights and opinions. If you found this video helpful, make sure to hit that like button, subscribe to Zacchy Crypto Update for more in-depth crypto analysis, and click the bell icon to get notified every time we drop new content. Thanks for watching, and stay smart and safe in your crypto journey.